Alright traders, happy new week to you all. Monday, beautiful morning, 21st of October 2024. So I'm going to walk you through what I have on my price chart today. Another opportunities has come. Opportunities has come again. Every week this come to us as a trader. So our obligation is to exploit these potential trade opportunities in the market and get hold of it. Right? Now, what I'm going to do is share this live market analysis with our students in the Telegram group. Join us in the Telegram group if you are yet. Join us. Right? This is where we share update before they become public. Okay. So, yes, you can see my chart on the USD paired against the yuan. Some of you might have been wondering, what is this guy's trading us? Come on, what is this? Yeah, this is an exotic currency pairs, one of the most liquid exotic currency pair. Yeah, this doesn't mean you necessarily need to trade this. Of course, you do not need to trade this. We have unlimited currency pairs in the market, so you have to choose wisely. Now let's dive through the major currency pairs, because I know this is what most of us are interested to trade in the Forex market. And we are going to start with the DXY, and you all know this is the first thing I'd like to do. Check my major currencies. Dive through the major currencies. Right? And you can use the chat box to comment, suggest, recommend, right? Share your opinions. Yeah. So we have the DXY. We're still going to dive to the weekly chart. You know, I love to mirror my analysis from the weekly chart. You all know I'm a swing trader and a position trader. So the lowest time frame should be as a swing trader for me. Yeah. So we have some level structures. In fact, let's wipe off everything we have on this price chart so we can start afresh. We start from the beginning, right? We have some level right here, and for those of you who are still new or still find it difficult to construct your key levels, do not worry. I have a video on production. In this video, I'm going to show you how you should construct support and resistance as a beginner in trading. Oh, it's going to be a fantastic video, right? Now, we have a certain key level structures we have to mark on this price chart. And I'm going to point these levels out, right? We have a swing low. That was on 30th of January 2023. We have another swing low acting as a demand. That was during the May-April 2023. First breakout, a lot of traders were being trapped right there. They thought the market was going down, but it did what? It reversed them. We had another support, demand, January 2024. Wow. And we have a series of manipulations at this level of the 26th of August slash 7th of October before we got a breakthrough. Now, this is a definite demand structure for price. So what we're going to do right now is to mark this level as our support, or if you would like to call it demand. The most important thing right here is we have people who are interested to buy. All right. Yes. Now, we got our demand or our support at the price of the 100.1483. That is on the DXY. Good. Now we have a series of resistance above, supplies all above, so we can connect another level at this level of the 106.481. Wow, this fits in nicely. I love this. Yeah. Now we can zoom in on our price chart. So these are the levels we're going to be looking at for possible reversals. Right now, currently we are at the middle of the major swings and the major swings lows, major swings highs. Now we have some intermediary or some minus levels we have to mark on this price chart, and now we use the rectangular tool, and this is the way I make my price chart, right? For those of you who have been asking what is the importance of the red lines, horizontal lines, and the rectangular grid tool on my price chart, so now you can have an idea of what they are all about. Good. Now we have a minor structure. Mark this level, and Marking this level means I want to capture lows, lower lows, lower shadow, So we mark this level right here. This is what we have on the DXY. Currently, we all can see DXY, it's in the point of hindrance. Yes, it's a point of hindrance right now, because we can see whenever we price bounce to this medium, we always have a surge to the upside. Price broke this level that was on the 29th of July. We rally all the way down to the major demand or support before we got a reversal. Remember, I told you our major lines, our major key level structures are for reversals. So we got a reversal to the upside. Now what we have right here, it's a reversal, and from this level, what we had was a reversal to the upside, right? That is nice. Okay. Now, what should we as a trader be doing at this level? What should you be doing? Number one thing you have to understand is, if you are looking out for a long right here, it means you do not know what you are doing. Get that point. If you're by now you are interested to long at the price of the 103.309 on DXY, it means you do not know what you are doing. Alternatively, if you are in a long position since last week, then you should throw some profit on this trade, because it is likely price might find a rejection from this zone. It is likely, it is not guaranteed. Yeah. Now, based on this structural formation right there, it's a no-no area for you to jump in for a long. But if you had carryover long entries since last week, you have to trail. And at this zone right here, this is the type of zones you have to look out for tight trail, right? Now, at this level, the question is, should we be looking for a short? If you shouldn't be buying right here, if you shouldn't be looking for a long, then can you short? Of course, that is the question. Can you short if you can't long? Now, the question right here is, let's go to the lower time frame and see what we have on the lower time frame. Of course, we can see prices as a point of interest for those who want to short, but can we see a short? Of course, we have a strong sell-off bar at this medium. Of course, some might call this a bearish order block, blah, 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 All I can see right here is a massive volume bearish breakout. Yes. Now, let's move to the day chart and see what we have on the day chart. On the day chart, if you ask me, am I seeing a short setup? The answer is no. I'm yet to see a sell short up. A sell short or a short setup. Yeah. I'm yet to see something to tell us we are gonna move down. Unless if you are looking for a sniper entry whereby you want to get in instantly before you see a confirmation, right? You all know me, I wait for confirmations in the market. I don't jump in. I don't do that. I want to see valid reason for me to be in a trade. Okay? Now, based on what I have on the DXY on the day chart, I'm yet to see a reason for us to go short, and I can't go long at this level. Of course, I can't go long right here. Now, the safest way to place this currency or this asset is number one. Can we see price breaking out of this level, giving us a retest of validation? That is the number one. That is the number one way I would like to trade this asset. Number two is, can we see price making a rotation from this level or back into this breakout structure for retest of validation for upswing? That is the second option I would like to the second option I would like to implement to approach this currency right here, or this asset. Point A for upswing, or point B for a validation of upswing. So if I can't see these two options right here, why should I be looking out for a short or a long? No. Now, let's think about the third possibility. The third possibility right here is, if we can see a sharp push into this level and a massive bearish rejection to the downside, that will give us what? An avenue for us to what? To short. And this short should be target of the break of structure. Break of structure, right here. Now we can construct another minor structure at this break of structure here. Now let's construct our minor structure with a rectangular tool. We mark this level to the right hand side, and this is what we have right here. So which means, if we can see a strong bearish reversal from this level, we could be looking out for a short to this downside, and then have our stop to be above this bearish block we got right here at the price of the 103.988. I think that is the safest zone to have our stop, and this will give us 2.5 risk to the reward ratio setup. That is nice. If you can still have like 2, that is still okay, but anything less than 2, I won't advise that. So this is what I can see on the DXY. Let me know in the comment box if you think this is better approach, or you think there's a way you could have done it better. Right now, In summary, our DXY is here to give us any indication of entry for short or long. Now let's go to the British pound sterling against the USD. It means we still have to exercise patience in the market. Patience, patience. Now, GU. Yeah, this is what I have on the GU, and this GU, a lot of traders are having difficulty to construct their key level structures. Of course, I understand. Now, let's wipe out these things, everything we have on this price chart, and let's start afresh. Okay. Now, based on what we have on the GU, I have a break of swings at the price of the 1.31418. We mark that level. We have a major swings at the level of the 1.20705. Okay. We have another swings rejections at the price of the 1.18490. I think we can put this level right here. Good. Now we have a series of rejections to the upside. So I would prefer to use the rectangular tool to mark some demand zones right here. And the next one comes in at these zones. This is another level. And we zoom in on this price chart. We can track these lows and these lows all together. So we can go to the day chart and see how we can mark our levels. We're going to use bars to mark our levels right here. So I'll look out for the bullish reversal bar in this market as my technical demand zones. This is what I mean as my bullish reversal bar. I mean the bullish candlestick that gave the bullish rise in this market is this bar that was formed on the 2nd of July 2024. So we use that highs and lows of that bar as our demand structure. Okay. Now we have our technical levels, and then again we can zoom out on this price chart and see the next structure. We have a break of highs. We took this high off on the 20th of August. We rallied back into this high. We validated it as a potential demand. Price rose up, and price is still struggling at this level. But however, last week, that was on 16th of Wednesday, price broke through this level. But since then, we haven't seen a sustainable push to the downside. Okay. Now let's just construct a minor structure on this price chart with a rectangular tool to know, okay, there is a point of interest right here, and then we mark this level. Now, based on what I can see on the GU, price is currently at a point of interest. Yes, of course, I told you, point of interest, because based on what I have right here, whenever we rally to this level, we have what? Rejections to the up, to the downside. We broke through, went up, validating, and currently we are still struggling around this medium. Now, what we are looking up to right now is this level to act as either demand or supply. Now, based on what I can see since Friday and last week Friday and Thursday, there's a higher tendency for this level to act as a demand for price. So which means you could see a surge to the upside to test the last higher high swings that was carved on the 28th of August 2024. So price could tag this level as a right shoulder. Remember, in some of my analysis on this asset, I keep on repeating, I said there's a higher tendency for price to give us a head and shoulder chart patterns right here, and this, what I'm seeing right here, it's likely to occur. Of course, there isn't any guarantee right here, but we still have to give the market the room to play out whatever it wants to do. Okay, now based on what I have right here, I'm supporting the bullish side on the DXY. I'm waiting for what price has to do today, and let's move to the 4-hour chart. On the 4-hour chart, I have the kind of a patterns. We have some inner patterns. We have from this low high swings all the way fire it to the back. We have that, and I was in a live class with some of my students, and a student asked me, "Mentor, why do you connect your trend line from the front to the back instead of connecting it from the back to the front?" And I asked, where is the closest price actions to you in the market? What I mean is, for you to connect your trend line or your channel, you look out for swings that are closest to the current market price action. This is the current market price action on this currency pair, right? Today, Monday, 21st of October 2024. Now, where is the closest previous low high swings? The previous low high swings in this market is white. It's right here. That is on the 15th of October 2024. So that is why you see me connect my trend line or my channel from this closest low high swings instead of going back to past historical actions. Friday, 4th of October 2024, I think this is not the best way for me to connect. If you connect it right here, well, that is acceptable to your own concept. But based on my concept, I prefer to construct my trend line channel from the swings closest to the current price actions in the market, right? Do not worry. I'm going to create a tutorial video on how to do that, right? Now, if I to the front, now technically we can see price is still going through a channel. Now, for us to trade this pattern right here, we need to see a channel breakout. And there I can see liquidity coming at this zone. This liquidity has high tendency to break out of this zone. A retest is possible or not. I will keep on running to the upside, right? So this is what I'm expecting on the GU. Currently, what I'm waiting for right now is I want to see if price can rally to this structure, give us a strong technical long buy, and if you can see that, we can initiate a small long position. Remember, this is going to be an aggressive entry, because an aggressive entry right here means we are here to see a switch of market trend. Low high swings, low high swings, low high swings. So if we are going to be looking to long into a low high swings, then we need to take a small position size, and then we need to see a strong technical action. I'm here to see a strong technical action right here. You can't tell me this candlestick right here is a strong technical action. I want to see candlestick like a chap down, a bullish surge up, like a bullish engulfing, like a pin bar or something like that. I think that would be nice. And then I'll be looking out for small entry. If it breaks out of this channel, we had more. A retest continuation, we had more. That is how we keep on scaling up. So, in summary, I'm yet to see a point of entry yet. The setup right here is yet to be confirmed. We still need to wait for confirmation. That is what we have on the GU, right? Now let's go on the AUD paired against the USD. AUD paired against the USD. Wow, we're still seeing a downswing push. Here's a day chart. We are still pushing to this liquidity demand zones. So we mark this level right here with this bar. We mark this. Okay. This is what we have right here. We are still gravitating to this level. Are we gonna break through, or are we gonna clear up? Let's see how far we can go. New Zealand USD, nothing realistic. USD Canada, we are still uptrend. We are still uptrend. We are still uptrend. Let's put this on the lower time frame. USD Canada, some traders actually wanted to short based on what they saw on the day chart. Some traders saw a pin bar on the day chart, and they were saying, "Oh, this is a retest of this neck of this breaking double top here." And there is a pin bar. Let's go for a short, and now they are trapped. So we are still expecting price to go to this level, right? What we add right here, it's a point whereby it doesn't have a lot of interest. It's not the point of interest, right? So you can see I mark my higher low swings. If I can see price rotating, crashing down, just like what I stated in my weekly Forex forecast. You have the analysis on my weekly Forex forecast. Everything is stated right here. Okay, so let's go to the 4-hour chart. On the 4-hour chart, based on what I gave this analysis in my weekly Forex forecast, and I told you, I said it's likely we might have top 1, top 2, neckline, breakout, pushback, downside. So let's see how far we can go. So if you are that sniper entry trader, you could be looking out for a sharp rejection at these zones, maybe like a pin bar. If you want to make your first entry at this zone, you have to be very, very careful, right? But if I were you, I prefer to see a switch of structure, downtrend, breakout, retest all the way down. I love to play it safe. Right? So that is what I have on the USD Canada. USD Yen, what do we have right here? USD Yen, what do we have on USD Yen? USD Yen, what do we have? USD Yen, I love the chart on USD Yen. It's a clean chart, and this type of chart traders should look out for trade opportunity. It's so clean for us to analyze. You can see that. So based on what I have on the USD Yen, We see how to exercise patience to see how this week is going to react to this minor structure of the 150 or 151. Right? USD Swiss, nothing realistic. And then please guys, I announced my position in the Telegram group, and this announcement was with my VIP students. So let me just let the cat out of the bag now. Is that right? Okay. So I took a trade on natural gas. I took a long position, and currently I'm in something great. So I already shared this with the VIP students, so some of them are in the trade. So we are currently in the trade. I got in at a lower price. We are currently in profit. So congratulations to the VIP students. And I told you this trade could hold for weeks or months. So with this type of trade, I'm okay to go with my normal daily activities, monthly, weekly activities. So this is just single trade right here. I told you how I took this trade from the 29th of August, how I rode a lot of massive trend. And currently right now, I'm having another opportunity on natural gas to hold on to another long-term trend. This could be weeks, months, right? So we are currently right there. I can see how the market keeps on rallying all the way up. So this is based on continuation of what we have. Continuation on natural gas. We keep on hoping for more uptrend, right? So that's what we have on natural gas, right? So guys, this is what I would like to share with you. Right, and for we have a oil market. I'm still monitoring the oil market, but the market is kind of very complex at this zone, so I'll be very careful. So I'll update you guys whatever I have on my list, whatever I want to do in the market. I'll always update you guys in the Telegram group. If you're here to join us, just use the subscribe button. If you're here to join us, there's a link in the description of this video. Just use that subscription button. The join us button. Now let's go through some assets. I have some assets again. Yeah, this was my natural gas when I got in. So that is the natural gas position. I can see that is what I have on my own personal chart. I'm already in a nice position right here. So if your broker offers you natural gas, you can still take advantage of that, right? It's a trade that could last us for weeks. So this is how I trade. Whenever I get it right, I put it right there, let it germinate. So let's go to the cryptocurrency market. Cryptocurrency market, I announced my positions right here yesterday during the weekend, but currently right now we're having a massive pushback. Whoa! The market is greatly pushing back on us on Notcoin. Let's see how far we can go. Maybe we're gonna be strike out of this position, or maybe we're gonna still be in this position, right? So that's what we have. We have this kind of a possible trend line here. Okay, that's what we have on Notcoin. We have the Polkadot as well. Polkadot as well. We had an entry that was yesterday, right? Let's see how far we can go. So that's what we have on Polkadot and Notcoin. So let's check the cryptocurrency market. Cryptocurrency actually controls other markets. We were unable to have a sustainable breakout last week, but the last week ensured a strong bullish close. That was nice. So the possibility of Bitcoin breaking out is still active. So currently right now, if you're a speculator, I think this is the time you have to pay attention to the chart of the BTC, because it's likely for price to push back to the level of the 63.650. Yes, you had me right. Massive pushback could occur to this level to generate more liquidity for the continuation, right? So that's what I have. That's what I want to share with you in this class today. I'll see you in the next one, and manage your position safely, right? Trade safely. I will see you in the next one. Peace.